If you're about to pay capital gains taxes and you don't have a plan, you need to listen up because capital gain taxes will destroy your wealth and your future income in retirement. If you happen to have a business or you have real estate that you're going to sell, you may have an LLC or a corporation, but you have some kind of appreciated asset. I mean, it's grown in value, which is a good problem to have. But now you're up in retirement years. You need to spend time with the family. So what are you going to do? You're just going to go to your CPA and you're going to ask for a tax plan. What happens a lot of times, they say you can owner finance. They don't have a lot of solutions. So you're going to sell your real estate for $4 million. Let's say you paid $1 million for it. You might have $900,000 to $1 million in taxes all in 1 year. $1 million in taxes that you're going to pay is going to destroy your wealth because of the lost opportunity cost that you may have. And by the way, I'm talking about real estate and business, and you may have Apple stock that has appreciated, maybe whether it's a business, you have stock or Bitcoin. You want to protect it from the IRS. It's not avoidance, it's really minimization of the taxes. You're eventually going to pay taxes on the growth of that. Say you sold and you were about to pay $1 million of tax here. Well, you can do trust. There's a lot of different strategies to eliminate the tax. If you want to do an installment sale trust, if you want to do a 1031 exchange, if it's real estate, there's a lot of different ways to minimize taxes. But what the most important thing that you have to realize, it's not the $1 million in tax that you're going to pay. Let's say you're 65 years old and you're expected to live to 85. That's 20 years in retirement. Hopefully you live longer than that, but let's just say you live to 85 years old. Well, if you earn 7.2% in interest on that money, the $1 million, you didn't pay the tax because you actually implemented a tax strategy, and that grows in 10 years. Well, now it's $2 million, right? That's the rule of 72, which financial planners teach all the time about this. And then another 10 years it gets to grow. Now we're talking about a $4 million opportunity cost because you didn't seek out a financial planner, a tax planner to implement. It wasn't the $1 million that we're worried about. It's the $4 million that you don't have anymore because it wasn't there. It was given away. You need to reach out to your advisor if you have one. If they don't come up with a plan, you may not have a tax planner. But there is information out there today, whether it's real estate, an individual stock, whether it's an LLC, a business, an S corporation, whatever it is, you get appreciated asset. You can find more information on our website at financialplanningva.com.